Hey everyone, welcome back to Tesla Daily. Today is March 29th, 2026, and we've got a lot to cover. First up, let's talk about some production changes at Tesla. We know how crucial production is for keeping up with demand, so it'll be interesting to see how these adjustments play out. Now, on the service front, we're still facing some challenges. It's been a bit of a bumpy road, but we're hopeful that improvements are on the horizon. Switching gears, let's compare Tesla's Optimus with Amazon's Sprout. Both are making waves in the robotics space, and it's exciting to see how they stack up against each other. And speaking of numbers, we need to address the decline in Tesla's Q1 deliveries. It's a tough pill to swallow, but we're all in this together, and we know the company is working hard to turn things around. On another note, XAI is experiencing a leadership shakeup. Change can be unsettling, but it might also pave the way for fresh ideas and innovation. So, that's a quick rundown of what's happening. Let's stay optimistic and keep our eyes on the future. We'll get through these challenges together. In a significant shift, Tesla has officially ended the production of its flagship Model S and Model X vehicles, as confirmed in an email to customers. This decision marks the conclusion of an era for these luxury electric vehicles, which played a pivotal role in establishing Tesla as a leader in the electric vehicle market. The email expressed gratitude to customers, stating, "Thank you for being part of their legacy," highlighting the impact these models had on the transition to electric transportation and the development of autonomous technology. The discontinuation of the Model S and X comes as Tesla prepares to focus on its future, with a limited inventory remaining for those still interested in purchasing these models. Notably, Tesla is offering substantial discounts on slightly used inventory, ranging from $1,000 to $4,000, and enticing perks such as free premium connectivity and full self-driving features for the remaining vehicles. Simultaneously, Tesla is making strides in expanding its infrastructure for electric trucks. The company recently opened its first megacharger station in Ontario, California, designed specifically for its semi-trucks. This station is part of a broader plan to establish 66 megacharger locations across the U.S., enhancing the feasibility of all-electric shipping fleets. The megacharger can recharge a Tesla Semi to 60% in just 30 minutes, a game-changer for logistics in one of the busiest freight corridors in the country. As we look ahead, the phase-out of the Model S and X signals Tesla's commitment to innovation and adaptation in a rapidly evolving market. While the end of these luxury models may seem like a setback, it aligns with Tesla's broader strategy to prioritize autonomous technology and electric commercial vehicles. With the ongoing expansion of the megacharger network and the development of new models like the Cybercab, Tesla is positioning itself for future growth in both the passenger and commercial vehicle sectors. In conclusion, while the end of Model S and X production may be seen as a loss, it is part of a strategic pivot towards a more sustainable and technologically advanced future. We remain optimistic about Tesla's trajectory as it continues to redefine the automotive landscape. Here's the next update you should know. In an intriguing juxtaposition, we find ourselves celebrating the remarkable longevity of Tesla's battery technology while simultaneously grappling with ongoing service challenges that have left some customers frustrated. Recently, a YouTuber embarked on a 220-mile journey across Ukraine in a 10-year-old Tesla Model S, aiming to test the limits of its battery life. Against all odds, the vehicle completed the trip with 17% battery remaining, averaging an impressive 149 watt-hour per kilometer. This test not only highlights the durability of Tesla's battery technology, but also serves as a testament to the brand's engineering prowess, especially for a vehicle that has clocked over 226,000 kilometers, 140,600 miles. As the driver noted, this well-used Tesla Model S proved that it still had plenty of life left in it. However, not all Tesla stories are as positive. A Cybertruck owner recently expressed frustration after a routine service visit led to additional issues, including loose trim and a malfunctioning odometer. The driver humorously described their vehicle as a stainless steel Tamagotchi with no batteries, reflecting a sentiment shared by many in the Tesla community. Service experiences like this can undermine consumer confidence, especially as Tesla faces declining sales and increasing scrutiny over its service quality. Despite these service challenges, it's essential to recognize that Tesla vehicles generally require less maintenance than traditional gas cars. According to a Consumer Reports survey, Tesla vehicles had the lowest repair and maintenance costs of any auto brand in 2023, saving owners nearly $1,000 more over a decade compared to competitors. This is a significant advantage as the market for electric vehicles continues to grow, with 1.3 million EVs sold in the US in 2024 alone. Looking ahead, while the battery longevity showcased by the Model S is a strong point for Tesla, the company must address its service issues to maintain customer trust and satisfaction. As we transition into a future dominated by electric vehicles, Tesla's ability to balance innovation with reliable service will be critical to its long-term success. The road ahead may be challenging, but with its strong engineering foundation, we remain optimistic about Tesla's potential to overcome these hurdles and continue leading the EV market. Here's the next update you should know. Tesla, Inc. has announced its delivery estimates for the first quarter of 2026, revealing a significant slowdown with expected deliveries of 365,645 units. This figure marks a 12.5% decline from the previous quarter's 418,227 units, although it still represents an 8% year-over-year increase from the 336,681 units delivered in Q1 2025. While these numbers may raise concerns, it's important to note that Tesla has regained over 50% market share in the US electric vehicle sector, a notable achievement amid a broader 28% drop in EV sales across the country. In terms of production, Tesla's lineup continues to evolve. Analysts project that the company will deliver over 1.68 million units in 2026 and aim for over 3 million by 2030. The anticipated deliveries for Q1 include a substantial 351,179 units of the popular Model 3 and Model Y, underscoring the ongoing demand for these models. Elon Musk has hinted at a potential new model that could feature 3 rows of seating, suggesting an exciting addition to Tesla's offerings. This comes at a time when Tesla's sales are rebounding in Europe after a challenging year, indicating resilience in its global strategy. Despite the delivery slowdown, Tesla's battery deployment remains robust, with estimates of 14.4 GWh for Q1, a slight increase from the previous quarter. For the year, projections indicate over 65.2 GWh of battery deployments, reinforcing Tesla's commitment to energy solutions alongside vehicle sales. Investor sentiment remains mixed, with some industry analysts expressing concerns about Tesla's pivot towards AI and robotics, potentially overshadowing its core automotive business. Ross Gerber of Gerber Kawasaki remarked, "People have already forgotten that the company makes EVs," highlighting the ongoing debate about Tesla's future direction. Overall, while the delivery figures may be disappointing in the short term, Tesla's strong market position, innovative product pipeline, and commitment to battery technology suggest a balanced outlook for the future. As we navigate through these challenges, Tesla's ability to adapt and innovate will be crucial in maintaining its leadership in the electric vehicle market. Here's the next update you should know. In a significant turn of events, xAI, the artificial intelligence venture led by Elon Musk, has seen the complete departure of its original founding team. The last 2 co-founders, Ross Nordin and Manuel Kreuss, have exited the company, marking a pivotal moment as xAI undergoes a major restructuring ahead of a highly anticipated IPO. This shakeup comes as Musk has openly stated that xAI was not built correctly in its initial phase and is now being rebuilt from the ground up. Nordin, who previously worked at Tesla and played a crucial role in the company's operations, reported directly to Musk. His departure follows a wave of exits that has seen 9 of the original 11 co-founders leave the company. Kreuss, who led the pre-training team, also informed associates of his decision to leave earlier this month. This mass exodus raises concerns about the company's stability and its ability to compete with established players in the AI sector, such as OpenAI and Anthropic. Despite being one of the best-funded players in the AI landscape, xAI has struggled to scale effectively. Musk's ambitious vision for the company, includes integrating it with SpaceX and X, formerly Twitter, creating a conglomerate that aims to dominate the AI market. However, the loss of key leadership could hinder its progress. Musk has previously expressed confidence in xAI's potential, stating, "We should probably get there by the middle of this year," regarding their competitive coding capabilities. Yet, with the foundational team now completely restructured, the path forward remains uncertain. As we look ahead, the long-term outlook for xAI will depend on how effectively it can navigate this transition and attract new talent to fill the leadership void. The upcoming IPO is expected to be a critical moment for the company, potentially raising up to $80 billion to fund its ambitious projects. However, the success of this venture will largely hinge on the new direction and leadership that emerges from this tumultuous period. Now let's shift to the next story. In a bold move that could redefine semiconductor production, Elon Musk recently introduced his ambitious Terafab project, aiming to produce a staggering terawatt of compute power annually. This initiative comes at a time when the global semiconductor industry is grappling with significant supply constraints and increasing demand, particularly from AI applications. Musk's vision highlights a critical need for more chips, as he estimates that current global AI computing capacity stands at only 20 gigawatts, merely 2% of what he anticipates will be necessary. Musk's Terafab is not just a manufacturing facility. It represents a strategic pivot for Tesla and SpaceX, both of which will be primary consumers of the chips produced. The demand is particularly driven by Tesla's upcoming Optimus robots. Now, let's shift to the next story. In a significant development for the robotics sector, Amazon has acquired Fauna Robotics, a startup aiming to carve out a niche in social robotics with its humanoid robot, Sprout. This acquisition raises questions about the competitive landscape for Tesla's Optimus project, which is set to redefine labor automation. Fauna's Sprout is a 42-inch, 50-pound bipedal robot designed for social interaction, equipped with a swappable battery lasting about 3 hours, and priced at $50,000 for research partners. Early customers include industry giants like Disney and Hyundai's Boston Dynamics. In contrast, Tesla's Optimus, described by CEO Elon Musk as by far the most advanced robot in the world, is focused on labor tasks, with production slated to begin this summer and scaling to 1 million units per year by summer 2027, priced around $20,000. While both companies are venturing into robotics, their strategies diverge significantly. Tesla aims to integrate Optimus into its factories to handle manual labor, whereas Amazon's Sprout is designed for social engagement and interaction, potentially targeting the home market. As noted in the analysis, the threat to Optimus isn't Sprout itself. It's what Sprout becomes when Amazon's 200 million-plus Prime members and Alexa infrastructure are attached to it. This distinction highlights the different markets each company is pursuing. Tesla's focus on labor automation positions it uniquely in the industrial sector, while Amazon's approach could redefine household robotics. With Tesla repurposing its Model S and Model X production lines to manufacture Optimus, the stakes are high. As we look to the future, the competition between Tesla and Amazon in robotics could lead to innovations that benefit consumers and industries alike. However, the long-term outlook remains uncertain, as both companies navigate their respective paths in this evolving landscape. Investors and consumers alike should keep a close eye on these developments, as they could have broader implications for the robotics market and beyond. And that wraps up our update for today. We appreciate you tuning in to Tesla Daily Insights. It's always great to share the latest with you. We'll catch up again in our next update. Until then, take care.